Welcome to this Energy Quick Chat, where we rub minds with stakeholders and players in the energy market. Now, Libya played host to the second edition of the Libya Energy and Economic Summit this week. The historic event showed the resilience and potential of Libya's energy sector, as well as the opportunities for economic development and cooperation. My guest today is Kellyanne Mealia. She's a co-founder and chairperson at the Energy Capital and Power, which is based in South Africa. Thank you for joining us on Energy Frontiers today, Kelly.
Thank you for having me, Justina. I appreciate the invitation.
Now, it's been the last Energy Libya Oil and Gas Summit held in 2021, and this is the second lap of that event. What are the key outcomes from the summit this time around?
Thank you for the introduction. Well, the Libya Energy and Economic Summit took place just this past weekend in Tripoli. And one of the key outcomes was how Libya is going to reach its new 2 million barrels per day target that it set out. It's a very ambitious target, but it requires the full cooperation of the Libyan government, the national oil company, and international players such as Eni, Total Energies, and also the local players. So that was one of the key focus. Of course, energy represents one of the biggest drivers of the economy in the country. And it also, the summit also looked at how Libya can maximize the entire energy value chain. Yes, the upstream sector is picking up, but Libya also has a strategic position to play with regards to downstream, not only meeting its domestic needs and regional needs, but also looking at increasing exports to the European market, which is not so far away.
Yeah, those are very ambitious targets right there. So can we speak specifically about the investment flows? What is Libya doing to ensure that these investment flows into its hydrocarbon value chain in order to achieve sustainable growth?
Well, the Libyan government has been hard at work since 2022 and 2023 to introduce a series of strategic measures to increase investment across the hydrocarbon energy value chain. So one of the first things that the Libyan National Oil Corporation has done is launched a plan which is aiming to revitalize the oil and gas industry. They have put together a strategic programs office to launch an international tender, and this is the first tender for the past 17 years. So we're looking at more opportunities for international companies to take place and tender for contracts in Libya's energy sector. Another key initiative is re-engaging oil companies on the level of their E&P, especially their exploration activity. So these talks have taken place with Sonatrach, with Eni and Total Energies. And those three companies, as a result, have committed to new investments across their upstream activities. And there's another tender initiative, but this time it's focused on domestic players and encouraging them to invest and take a greater kind of participation in the oil and gas space there in Tripoli. And one of the biggest things that the Libyan government is working on is revitalizing the downstream sector. As I mentioned before, Libya really holds a strategic place with regards to export to a European market. There's already an extensive network of pipelines for export, and there's been more investment released to maintain that existing network, but also to create more export oil terminals on the northern coast of Libya. So those are some really exciting initiatives and investments that are going to be rolled out throughout the rest of 2024 into the following years.
Right. So how is Libya positioning itself in terms of partnerships within the African and international market? I saw that at the summit, there were a lot of deals that were signed. So how is it leveraging these shared resources and infrastructure in the oil and gas sector?
Sure. I think Libya, first and foremost, is focused on meeting its domestic demand, which I think is a really smart strategy, especially as we're looking at increasing energy demand in many nations, especially across the continent. Their second phase is then with their excess energy resources, looking at export markets, which of course is fantastic for raising additional funds that eventually go back to Treasury and to budgets across the economy. So in terms of wider cooperation, Libya knows that it's got a role to play, especially in the downstream sector and refined products. It means that Libya is looking at meeting regional demand for refined products and eventually, further afield. But I think what Libya's done in focusing on domestic needs first and then ramping up their export capacity both regionally and internationally is a very smart strategy in terms of how to manage their energy potential.
Yeah, that's a very smart strategy and a very wise one at that. So tell me more about how the industry is preparing for the potential shifts in global energy demand and the transition towards cleaner fuels, especially as we have the WEF going on right now and we had the COP28 just last year.
Yes, I mean, throughout the summit, renewable energy was an important topic that was discussed in a variety of ways. So the first opportunity is in cleaning fuels, and Libya is hoping to implement a decarbonization strategy that's reducing gas flaring. And that's a collaboration between 9 companies, and their overall target is an 83% reduction in gas flaring. Of course, earlier this week, we saw a massive deal signed in Nigeria between a Nigerian consortium and a Chinese company to reduce gas flaring. So that's, in line with what other countries are doing in order to meet, their obligations to creating a cleaner environment in terms of the oil and gas sector. The National Oil Corporation of Libya is actively incorporating renewables into their energy mix. Their first rollout will be using electricity generated with renewable sources to power its oil field operations. So that's a hybrid there of using a renewable generated electricity in an oil and gas operation setting. Another initiative, and this was actually announced at the summit last weekend, is a collaboration between Oil Invest and the NOC to plant 1 million trees in and around Tripoli. I believe them to be eucalyptus and pine trees, and then carbon credits will be traded from that reforestation project. And as we know, carbon credits are now being traded globally, so that's a really interesting initiative there.
So what key energy projects should we be looking out for that hold the most promise to boost Libya's economy this year?
Absolutely. So I think on the upstream side, one of the most notable projects to mention is the Sirte Basin Exploration Project. That is a integrated oil, gas and petrochemical project by OMV. So that's going to be launched this year, and that's after a hiatus of 10 years from that company. Another notable project would be the Structures A&E project. So that was launched in 2023 by Eni, and that's an $8 billion deal for developing gas fields in Libya's Area D. There've been a myriad of other explorations and discoveries or announcements to resume exploration by Tafnet, for example, and Sonatrach in the past 2 years. But again, going back to downstream, one of the biggest projects is a $600 million refinery project, and that is an oil refinery near the El Shahara field. So, that's the biggest. There are other refinery projects that are ongoing in across the country, Ras Lanuf, Zawiya, Tobruk, for example. So, Libya is heavily pushing its downstream capability and potential. And we're going to see, more and more downstream projects announced and investment put behind those types of projects in the coming year and going forward into 2025.
Right. Kellyanne Mealia, co-founder and chairperson at Energy Capital and Power. Great work you guys are doing over there. And thank you for sharing those insights with us.
Thank you so much for having me, Justina. Thank you.
And that's our quick chat on Energy Frontiers. Thank you, everyone. Make sure to comment, like, and subscribe to see more videos like this, and follow Frontier Africa Reports across all our social media handles. Bye-bye.